There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
I want to let everybody know today's the 18th of December, and we're coming towards the end. And the end is not nigh. So the end is filled with opportunity and potentially a great year next year. So one thing to keep in mind that, as I asked a couple times over the last few months, what everybody kind of wants to see from me, is always trying to get feedback and evolve into this. And essentially, I'm going to just show a flat screen here. What I'm going to do at this point in the recording, we're probably about 3 minutes into the recording, is I've been asked to do by a lot of people, and since the start of our financial company, First Down Financial in Orlando, Florida, we're a nationwide registered investment advisor and agency for large life insurance cases, so forth. We do for a lot of our sports clients. I've been asked to do my investment process. So I'm going to take and I figured I'd just shoot this, and it'd be sort of hopefully a treat for everybody, clients, some of our new agents and financial advisors that are coming on board our company, as well as a lot of Auvorians with our Forex company here. By the way, congratulations to basically almost 2 years with Auvoria. If you guys haven't seen the global update call where Bill Wynn, one of our owners and president, Chris Simonian, spoke, actually did a really good job on the call. I highly recommend looking at that. But I'm going to take probably about the next maybe 5-7 minutes. I'm just going to run through real quickly what my equity-based process is, so that prospective clients and anybody that has any interest can see how it goes. So with that being said, all these links will be available in the Market Watch channel. I'll put them up probably up on YouTube too. I may split this video out once I get the rendering straightened out up on our Tube channel, which is different from the Vimeo channel for Auvoria. So you'll probably be able to see it in both places, but I want to just split out a smaller version of this, just do a quick hit so everybody gets an idea of always outside of Forex, if one's investing, you're going to at some point going to want to get into an equity-based analysis. So if you do in fact want to do that and you want to buy or sell stocks, which I highly encourage everybody to have that diversification, both in trading talent as well as just portfolio construction for the long term, equities play an exceptionally important component. So outside of the last just 12 years of a bull market since the big hit and the S&P hitting 666 in the end of March of 2008 during the financial crisis, the market's up almost tenfold in the S&P, right? Overdue for a correction. Has been obviously excellent gains, but it's also been an unprecedented time of Federal Reserve monetary sort of cash, if you will, sprinkling down out of the skies for the last 12 years, which at some point is probably going to stop in the next year. So it'll be the first time that the market, in my opinion, will be able to stand on its own 2 feet, and hopefully there's plenty of chairs left over when the music turns off. So maybe not the best timing to be out there buying stocks, but I think it's the important process of understanding equity research and how we are sort of deeply rooted in process here at First Down that I think will be of some benefit to you depending on what level you use it. So each morning, let's see if we can give you a bigger screen here. It's a little bit easier to see. Let's get rid of the menu bar. So each morning I have a number of different pieces that I'll take a look at. Between the Hedges is a really good aggregate, and I know I've shown this before, but I'll put these links in. This is actually a really good aggregate of headlines. So I'll typically scour through what's going on as far as most of these news stories cover the gamut of everything, both sides of, obviously the conservative and more progressive sides of policy making in DC. So I want to know what's going on from that perspective. I want to know what's going on from different things going. Trying to skip through a lot of the short-term stuff and just focus on what's going on. I always take a look at a scoreboard of how the markets have done. Global markets, small cap markets, developed markets versus emerging. I want to focus a lot on some of these top internals, okay? Just trying to gather where we are. Just, you can spend a lot of time on all this stuff, and you can certainly, with many of these, you can click on them and get more information. But just, I really take a glaze through what's going on. You guys have certainly seen, which I'm not going to show right now, but I'll pop all the FinViz screens on, go to the futures dashboard, and then I will click on all the charts looking over 1 year. I want to see across everything from commodities to currencies to the different parts of the Forex space we talk more about here at Auvoria to determine what is transpiring either in money supply or in particular sectors that may have a correlated or uncorrelated movements in the current week. So just sort of trying to understand the ripple, if you will, and whether or not it can turn into a tidal wave. So there's a zillion different things I focus on, not as important here. What sector's leading versus lagging. This is actually a pretty decent. You can see what high volume gainers in ETF land. Keep in mind, there's over 1,000 ETFs now. If you're not familiar with the term, it just stands for exchange traded fund. It's basically a liquid way to trade a mutual fund. And many of these ETFs have low cost. So you can always look at the high volume gainers and losers. I don't really think this brings a lot to the table because I'm going to talk once I get past the research component of how I actually set up my screeners. So that's kind of it. And it has, cool thing about these guys is they have like a huge archive if you want to look back, and everything just sort of linked by category. So if you want to see, particular sectors going on, you can link to it here and so forth. Once I get finished with just a broad overview, I'll always, as I show each week, take a look at the Forex calendar. This isn't necessarily just for Forex, it's for the global markets. I want to filter this calendar out for only red folder events. I want to take a look at the next week as we're doing here. Typically want to see the calendar so I can understand what's transposing as far as seasonality, obviously jobs reports that are due, things like that. And then once I have a good understanding of, kind of what's coming down the pike, and obviously the last 2 weeks of typically, as far as equities, at least in the US, you have lower volume. You could have still some volatile moves, but a lot of people try not to disrupt it, especially if they've had good gains as portfolio managers into the end of the year. A lot of the folks in institutional land don't want to disrupt the apple cart, right? So, but typically you want to see what's going on end of the quarter, particular options expirations, anything that has to do with quad or triple witching. Those you all want to pay attention to in some subsequent Fridays as far as understanding flows, right? Now, next week, as we can see here, and I'm not going to spend a lot of time on this, but we don't really have a lot of events going on, whereas the previous week, we had a ton of events going on. So we had all kinds of volatility last week, whether it be domestic or global equity markets. Obviously, a lot of this has to do with different variants that we're putting out for, I should say different variants that are coming out on COVID, right? Good or bad, they are posing issues in terms of risk to the marketplace. So in the process that we look in terms of how we build and manage portfolios is really the same way, in my opinion, that individuals should manage their own portfolios. I don't care if it's $2,000 or 20 million. Obviously, the larger the portfolio, the more you have to be able to diversify in other areas, but the process wouldn't change for us. So once I've taken a look at the calendar, looking for obviously any big events primarily coming up, anything that can be just absolutely earth-shattering to my previous plan that I may have put together. So we try to employ the concept of Kaizen here. Always be flexible, always be willing to change, know that things could spin on a dime as far as the marketplace goes. So not really much going on next week. A lot of holidays obviously coming up, both Friday and into next weekend for Christmas. Once I've gone through between the hedges, I've moved through the Forex Factory calendar as far as news. I may take a little bit of a look at briefing.com, which is kind of the same as between the hedges, more of like stock related stories, some big stuff that pops up. And then I'll move into my lists. So this is the home page here, and then essentially the screener that we have. Now, I'm not going to spend a lot of time. I'm not going to disclose all of the, got to keep some of the trade secrets here, right? But I want to give you guys just an understanding of, if you're going to set up a screener, it's going to be how I view markets from the lens of momentum. Since I used to be a momentum trader, but I want to, from a momentum perspective, always be, into the equities for myself or clients. Some of the charities we do work for, in stuff that's moving, right? It doesn't necessarily have to be moving a lot, but that there is some push behind it, right? I guess we're all essentially looking for the Teslas of the last 24 months, right? We're all looking for that's the quintessential example of momentum, but we want to have stuff that at least has a shot, right? As we always joke, so you're saying there's a chance. So without further ado, the three key components of my screener. One is performance. So this is the most important aspect of screening. So I essentially eliminate anything that's not going anywhere. So the current settings I use are a minimum of up 50% on the year, okay? Now, I know this is a number that can be dialed up or down based on what kind of year we're having. Obviously, like in different years, you would have used 10% in years where it hasn't done as well, right? In years where things have just got crushed, maybe you would be using something that only fell 4%, right? So just trying to being relative to the markets, seeing something that offers up at least a little bit of already moved, so to speak. There are 14 things that we look for. And I guess I probably should have typed this in here. Most of this, I'll show you. Talk a fair amount about this book, but William O'Neill really is the man when it comes to this stuff. This is just a Google. It's been updated more than a few times, but IBD, which is Investors Business Daily, has one of the deepest databases out there on the planet, without getting all the ridiculous costs it takes to be a member of Bloomberg. Keep in mind those terminals are about $2 a month, or any of the Reuters or CQ-based stuff. It's much, much more affordable, and I feel it's a better database using IBD's database. But this book actually outlines a lot of the process that I'll go through. You're essentially looking for a big macro, really essentially just looking for stocks, and I'll jump back in the screener, that have put in a good base. They have to have a lot of other factors in place, right? So you'll see when these newspapers, if you ever start reading it, you're going to be looking for these three columns are the most important. This is the group strength, right? The SMR rating. This is essentially an amalgamation of a number of different things, a little bit artificial intelligence, accumulated distributions, essentially are institutions buying it or not. And then ultimately that culminates into a composite rating, okay? This rating staying anywhere in the 90s is good. That means that 14 factors have lined up and have made these the strongest based on a whole host of reasons. The biggest weights of which are massive earnings growth, right? But there's a whole bunch of other things in these components I'm not going to really dive into. But the key is once you've taken a look at your list, right? All part of the screener will also be a market capitalization, depending upon that. It'll also be volume. So usually after I run the screen, I'll end up with about 200 plus stocks. And the top 50, as you can see here, are listed um, in just the basic screener for composite ratings, right? I don't want to lose anybody. That's essentially the depth without really getting into it as far as how I put the screeners to work. It probably seems like it's more of a short-term trading-based process, and it's really not. I mean, ideally, in a perfect world, we'd like to put a portfolio together of anywhere between 10 to 15 equities for a client, like just we would recommend somebody does for themselves, but have the weights of each of these be somewhere in the area of 1 to 2%. We employ what's called the Kelly criterion, which you can see up on my screen here. It is a risk tolerance based analysis to determine what we're willing to risk account wise, right? So typically, we are rarely more than 2 to 4% in an individual stock, and we will broadly diversify out in dimensional fund advisors with some of the rest of the allocations and client accounts. If you don't know who DFA is, you can Google them. DFA has won more awards out there than anybody. They're the best money manager on the planet, in my opinion. And they have won 3 Nobel Prizes. So I'd rather use the expertise of an organization like Dimensional Fund for some of the allocations, and many of their funds carry internal costs of between 20 to 25 basis points. So we joke that essentially you're getting BMW quality money management with Costco or Vanguard type pricing. And it's very difficult to get in the door with DFA. So we have to become approved advisor, which basically means you have to go through the whole university to get approved, which I spent an entire week at their Santa Monica headquarters many years ago doing that. So cool thing is we do that as far as risk. I talk a lot about that at Auvoria, do the screeners. We narrow the screeners down to a list, and then the most important component comes into play, and I'll go and show you guys this. All the different pieces of technical analysis, I'm not going to expand these out, but this is sort of our research database. This is some of the stuff I originally built when I was coaching back in the early days before I ran an RIA at FXES Trader. So you'll see a lot of that stuff in here related to that. But we go through many different pieces of types of research. Technical analysis really is the key. I actually have a lot of this posted in the back. Something as an example like this. You're really looking for the bullish patterns of cup with handle breakouts, something similar that's traded in a pattern, as you may be able to see here. This is right here with the other 15 plus factors lining up as far as our screeners, something that is approaching a longer term. This isn't a 5-minute chart, by the way. It's something on like a hourly chart. Certainly these carry more weight if it's a daily or a weekly chart. I mean, hell, if they're monthly, it's even stronger. But statistically speaking, right, because this job's all about stats and risk, right? So statistically speaking, when these levels hit, this has a very high win rate. It's in the 70s if all these other factors line up. So it's not really that involved. We're not mired in all this buried in research that you hear from different talking heads on CNBC or Bloomberg or some of these financial channels like Fox Business or any of the Reuters broadcasts. It's we'll let everybody else handle all the research, right? If it makes it into that top 50 screener with IBD, they're the best stocks in the country, period, for a whole host of reasons. And one of the other important components, and if I can bring over, is that you always keep the historical charts. And I actually have a separate file. I keep all these newspapers in this huge stack in my office of the previous chart patterns. So here's a little bit of how we screen, how we do research, and that all culminates into hopefully a portfolio of 10 to 15 equities that increase in value. So let's close out of this here. So that, along with one of the final important pieces here, and this is Brett Steenbarger. He, in my opinion, is the single best dude on the planet as far as psychological investment. This is where you learn to build, as many have heard in the past with a lot of my presentations to different organizations, how to learn to control that inner monkey, right? If you look back to some of the really fun stuff I always get a kick out about from the past is I compare the human brain to those commercials for Samsonite in the 70s. If you've ever seen them, where they take a suitcase and they throw it in this cage with this huge gorilla. He's jumping up and down, he's beating it against the bars, but he can't break the suitcase, right? A really good trader is that suitcase. So there's so many events that can unfold to sort of break down or break apart your brain in that suitcase, right? And I don't see it happen. You know, there's bazillions of stories out there of real high quality traders that are able to compartmentalize their problems and sort of learn from them, but push them to the side, and they do not affect one's ability to make decisions. It is critical that we can sort of stay the course, but also cut your losses quick, or I promise you they're going to turn into larger losses. So sort of the last component of this is always making sure you have your, you know, your sort of Zen place, if you will, right? Whether it's working out like I do with my kid, riding mountain bikes, playing golf, or a variety of activities to sort of keep that Zen going. You know, I think it's important to bring an actual plan of some content or focus outside of your trading, or all the previous stuff I just talked about. It just doesn't matter. So in a nutshell, and we're at about the 23-minute mark. So I ran about 10 minutes longer, but that essentially is the process for how to equity invest. All right, so moving into the charts. What else do I want to address? I think that's pretty much it. So as I talked about last week, S&P had a huge leap back up, came back down. This is not a surprise for those that were in a I don't believe it type of rally, and now we're right back down below, by the way, although marginally, the rip. So this was possibly the final handoff to equity investors by institutions, because there's been selling. So, but we still have a lot of support points here in many different moving averages, obviously, and then the big one down here, which is almost perfectly, by the way, at the center line of all the volume that's executed in this entire range since June, right? So this 433 area, or essentially right in this 430 area, is where the long-term support is from a midterm chart pattern. Let's take a look at the DXY, because I'm going to glaze through this. Rip back up. A lot of bearish folks out there about the dollar, and you've seen a lot of stories. If we jump to the weekly chart, set the scale. We're coming back to test the highs, right? And surprisingly enough, if you just jump past all the currencies and look at the price movements, we still haven't, even though the sell-offs have, we haven't seen a rocketing up like you would expect in the gold space. This is a weekly chart, right? So we've had, if you're looking on a daily perspective, we've had more movement back up, but this was a total head fake right here. All right, so just take a quick look at the Euro USD. Obviously, as the dollar rallies, this thing comes back down towards this sort of cliff that's hanging on here, one spot 11 area. Of note is the rally was completely given back on the daily chart here for the pound dollar. Not surprising, dollar's rallying. Anytime typically you have global unrest and big concern, markets will flock to safe havens, right? Bonds, the dollar, right? Love them or hate those as asset classes, they still are viewed by institutions as a safe haven. funds will attract to those areas. Obviously, as the US dollar goes up in value, the Canadian goes down. Nothing related to that. Typically uncorrelated yen movements. US dollar stuck in the zoo again. AUD, USD. I wanted to show this as well as our GBP NZD. Let's take a look though at GBP CAD. This is one of our big EAs. Start off in the weekly chart here. We came off. This was last week. This was the current week. We just passed over. This was 2 weeks ago. We came back down and really just ripped back up into this area, and we're still stuck in a very long sideways trade. We've been on this weekly chart for quite some time. Be interested to see what happens if we get up above this. I would hope NEO will see that we've come up against this area many, many times. There's a whole bunch of stuff that it seems to me, if the pounds keeps moving up, right, you could jump between this and GBP USD, right, for just a general idea of where the pound did not go. But then again, looking at anything CAD related, it's been weaker as the dollar has strengthened. So you would expect at some point, actually, let me go back to GBP CAD. You would expect, just based upon that, our general thesis is it's going to go up and probably take out some stops up here. It's really overdue for that. Just like I talked about the dollar, came up against those areas. I'm like, look, this thing's going to break and run. It did, ran almost $2 full. And where it's currently housed a sideways trade since that rip. I don't want to be short anywhere in here. So just let it run. Be long, right? Certainly just buy the pullbacks. If you're in the Arrow trading room, which by the way, those guys have had a great year. Hats off to Nathan and the team, Jackie, for quality trading in that area. I would rather be long chasing this up. Take a quick look at crypto. This is the type of pattern that, barring any prolific news from an influencer, right? There's a lot of shills and influencers out there in this area. Notice they've all been quite quiet as they think this thing's just going to roll over. I'd rather be a buyer much lower. I've talked a lot about this 30,000 area being pretty strong support from a whole host of reasons, as you can see on the chart. It's just daily. But if we jump back to a weekly chart, some of the longer term time frames become very easy, where the breakout was here at this whole 10,000 area. This is the breakout last fall from a long sideways base. So technically you could say, from the standpoint of a cup with handle, right, being a sloppy pattern, but let's see if I can shed this to you guys. It was a cup with handle. It was a sloppy cup, but it's still, it broke. Here's your cup. Okay. Here's the handle. Broke right from this point. True liftoff was followed by institutional increase in volume, right? Plus, it's also become a little more mainstream, if you will. But this is the point where I'd probably be a buyer. Don't know we'll ever see it. Could be totally wrong on this analysis, right? Because, man, anything goes in crypto. Just my thoughts on the chart. So, that being said, next Saturday, let's just check the calendar here again, make sure we get this right. Yes, next Saturday is Christmas. I will not be doing a broadcast. All right, so I'll put it out in the room. I may record something on Sunday, depending on what's going on, but we're going to be out of pocket and out of Wi-Fi range on vacation. So I'll just wish everybody a great holiday, Merry Christmas. Thanks for sticking with me. It was kind of fun to have been at the helm here, and I'll continue to be at the helm going into the next year. May the trades and Santa be with you.